Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a short trade here on crude oil, looking at a rejection off of the highs and just trying to look for this to come right back down to the lows here. We just pushed up, tested this area, double tapped it, now we're falling off, so it's kind of what I was looking for here. Place my target here at 75.95, and actually my next target down here at 22, only have to adjust it by 1 up to 23. So right in the perfect spot there. We're in short right now at 76.37, and just hopping in on essentially what was a fake break of the low gives us a resistance above. We broke through this first block of resistance, but we still have to keep it in mind for support. So I'm looking for my target right at the lows of that potential support area right there. My stop is in place all the way up at, well, I say all the way up, it's 10 ticks away, but 76.47 up at the highs, and then just looking for a little bit of downward pressure here back to these lows. Typically with these fake breaks, you have a little bit of an overshot to the upside. That overshot leads to a little bit of a mixed review. You know, you've got some profit taking in here if you've been short all morning, but you've also got folks who are looking at this as a reversal, so you've got buyers, you've got a lot of stuff happening right here. But typically with these fake breaks, I'm expecting it to come right back down to the low here. So I'm targeting a little bit ahead of the low to be safe, just because I do have an area of support ahead of that. So 75.95 is my next target afterward. So 76.23, I'm short at 37. That first target's going to give us two contracts off at 14, so it'll be 28 ticks. Then the final target all the way down here at 95, that's going to give us 42. So if we can hit that one, that's another 84 ticks on top of it. So this has the potential of being a really, really big trade, even though we're only going in with 4 contracts on a relatively aggressive entry, that little kind of tap back. So 112 tick potential on the trade. We'll see, obviously, if it wants to fulfill that. But right now we're short at 37, just waiting for a little bit more conviction to the downside, see if we can get that first target filled at 23. All right, coming one tick away from our target here. Need a little bit more conviction. Had a little bit of a bounce right here, just getting stuck at the BMT, so it's not a surprise to see a little bit of a bounce there. Because we came one tick away from our target, I want to see it actually hit it since we haven't even gotten our first target yet. But what I'll do is I'll lock in my stop just to break even +1 ahead of that little kind of poke higher that we had here at 944, and that will protect me from at least it coming back on me. I don't want to get it too close because then you just get whipped out, but okay, perfect. So we did get that target filled. So 2 contracts left. Stops at break even. We may be able to get a little. Whoa! Getting all kinds of volume here. Okay, so with that excess volume, I really don't want to see this come back on it. So I'm going to go just above this little kind of swing that it just made right there. It's a huge amount of contracts that just came in right there and dumped it lower. Very, very aggressive movement from the sellers on this one. So we're seeing that kind of rejection that we want. Normally, you may just get that first target, bounces you out, and then just comes right back up. But in this case, we had some quite a bit of selling conviction pop right back in here. Now, because of that selling conviction, I don't want that to reverse on me. You know, that old adage of what goes up must come down. I don't want that to reverse and go all the way down and then whip right back up with that same strength. So I'm going to be a little bit more aggressive on my stop and just keep locking it in wherever I can. But we are getting a lot of selling pressure here. I just want to avoid getting whipped out and all of a sudden all the sellers that came in here reverse it and shoot it right back up another 20 ticks against me. So we don't want to see that happen. So stop right now is at 76.14, being a little bit aggressive. May not even have to pause the video very long. We're getting quite a bit of aggression down here. But the next target's at 75.95. See if we can get that filled here in a couple minutes. And yeah, that'll call the trade. So again, on the way down, this kind of happened really quick here. But we're looking at locking in a really nice trade here, 112 ticks, if we can get that secondary target filled. Even if it comes up and stops us out from our entry to our stop, we still have 23 ticks on 2 contracts. We've got 46 ticks locked in. So, I mean, either way, just on this final contract trail, we've got what we'd like to get just out of an average trade anyway. So we're sitting in a really good position right now. So maybe being a little bit too aggressive isn't the best idea, but let's see here. We came 1 tick away from my target. So again, I don't want it to reverse. Oh, there, 1 and 2. There we go. Perfect. All right, I was going to lock my stop in a little bit more, but it split filled me. Gave me 1 and then waited and then gave me another one. But we got all the targets filled. Beautiful short trade off that little kind of double tap of the resistance up there at 45. And that'll wrap up the morning. Great trade on crude oil. Going into Thanksgiving week, I'm expecting it to be a little bit slow here. We'll kind of see what it wants to do, but overall, this usually Monday, Tuesday aren't too bad. Then you start getting into Wednesday, and then it starts slowing way, way down. So you got to be careful this week, looking for only the best one and done type patterns. And today, that's the one and done. So we've got 112 ticks on the trade. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.